Friends, in this video for iThought Advisor, I am going to talk to you on the topic advisory, the tough part. Everybody wants to get the best advice. We want to get the best advice at the right time. We want to ensure that we are able to act well in time using that advice. Naturally, there is a process. The advice is given to you, you evaluate it, then you make up your mind, then you find the resources to follow that advice, and then you implement the advice and you execute the transaction. So there are multiple steps in this process. The process is not at all simple because the decision making primarily rests with you. Unless you decide to buy an investment, an advisor can never make you buy it. So the final decision is yours. Now, understanding this process is very important. Why do I say this? Because when the markets go up like we are seeing in recent months, the time available to implement a decision is going down. The time before us during which we still get that investment at an attractive level is short. So, if you are going to take a lot of time to take the advice in, assimilate it, evaluate it, make up your mind, provide the resources and then execute the advice, then what happens is that the opportunity can get lost in decision making. I see a lot of this happening right now because people are trying to second guess the markets, second guess social media, second guess television and second guess the advisor. Now this business of second guessing will probably work if you are buying what is fully discovered. Let's say you are going and buying ITC, or you are going and buying a HDFC, or you are going and buying an ICICI, or you are going and buying an Asian Paints, or you want to buy tech companies. These are well discovered ideas. Decision making is simple, and when you go out and seek validation, all these places where you go out and look for validation will offer you enough support to your decision. Flip it around. I am going to give you a different scenario. Let's say you are going to buy something which no one is willing to look at. After all, if you want to make market beating returns, you must make decisions which are very different from what everybody else is doing. You must be beating others to an idea, buying it early after due evaluation. So that is what is going to bring you bigger success. Now, as an advisor, what would we want to do? We would want you to get there. We would want to ensure that you participate, that you make your evaluation, decision and execution in time so that you are not late to that party. The competition, mind you, is very high in a bull market and it's not going down anytime soon. The themes are all getting identified, spotted, evaluated and participated into by your peers at a faster rate. So it's very important that you are not beaten at that game, and that in my view is the largest advisory problem at the moment, and this problem can be solved only by the investors' recognition of what it takes to succeed in a competitive market scenario. But people are still not able to make up their minds for two reasons. What are they? When the market goes up, you want your portfolio to run faster, and when the market goes down, you want your portfolio to fall lesser, right? You want both. But ideally, you can't have both. You can have only one. If you want to take high risks where your portfolio is always running ahead of the market, when the market falls, it will fall also more than the market. That is inevitable. So, you have to accept that you will take more risk, moderated risk or less risk. That is something that is going to be driven by your personal risk profile. It is not something that can be driven by what your friends are doing. It's not driven by what your advisor does personally. It is not driven by what you think is high return. It's driven by what is good for you. So that is something which again investors need to recognize now more than ever before, because opportunities are going down, the number of teams available to invest are fewer, the valuations are fluctuating quite a bit. They come in your favor and stay in your favor for very short bursts of time. During that short burst of time, you need to participate quickly and build a position of reasonable significance, so that when that investment performs, it creates a significant difference to your overall investment outcome. At your portfolio level, you should have a meaningful difference in every decision you make right now. There's no point buying a great winning idea, but buying a very little part of your portfolio in it. So, scaling up also has to happen within reasonable time. Most people think that scaling up will happen naturally. Most people spend more time in only identification of the opportunity, understanding the investment opportunity, and accepting the advice. So, lot of time tends to get lost in this, right? If an investor wants to succeed in the current market context, he needs to cut short this cycle time so that he gives himself more cycle time in execution, because you're not going to put all your money in one day. You're going to invest it over a period of time. That period of time should be available before you. If you take so much time to decide whether to participate in an idea, by the time you decide, the idea would have moved 10%. Then the meaning of participating in the idea may sometimes become lost. An investor must ensure that he doesn't lose his focus on why he is seeking new ideas, what he wants from them, how his investment behavior can ensure that he participates adequately, and what it takes to build an adequate position size in each idea which is high conviction. If you are doing the contrary investing as we exhort you to do, where you are going to be earlier than others, you are going to get into ideas before others do and have a very comfortable investment journey when others are running after your ideas, then you need to be faster to board that train. So, you can't be the last one trying to board the train, because you will be part of the stampede. This, in my view, is the biggest predicament in the current market. I find that smaller investors take more time to decide, and the larger investors actually have a more open approach to decisions. So, what is happening is the investors who are smaller, whom we want to scale up and whom we want to achieve more returns and who want more objectives fulfilled, are actually getting left behind because of their decision making speed. I advise that you recognize what it takes to arrive at your decision, engage more with your advisors, if necessary, get more evidence that will support your decision, but make your decisions within reasonable time. Inordinate delay in decision making is not helping you achieve what are your investment objectives, what are your investment goals, nor why you are doing your investing for. So, that is something which is a big challenge at the moment, and I would request all of you to take these thoughts and assimilate them and come up with a response that truly helps to take your investing to the next level. After all, we are all in this only with that mission in our mind. Thank you for watching this video.